Hi, I'm Lisa Leiter. In Chicago Business Today, strip mall vacancies. One look around the Chicago area and you don't need an official report to tell you. Local strip malls are emptier than they've been in the last 30 years. The vacancy rate at area shopping centers has climbed for 3 straight years to 11.8%. It's the highest since at least 1980, when research firm Reese began tracking the numbers. And Chicago has suffered more than other areas. Its rate is a full percentage point higher than the national one. The report includes large centers anchored by big box tenants and supermarkets, and the smaller ones, which are typically filled with smaller retailers. All have suffered during this last recession, with rising unemployment and a consumer spending pullback.
The vacancy rate has increased due to what's happening in the economy. You have jobs that have been lost. People are not spending. You have developers 5-6 years ago who built centers that are still trying to fill them. So the retail market is contracting. Fewer retailers are growing. There still is that inventory out there. So that gives you discrepancy. The supply is greater than the demand.
Reese forecasts the vacancy rate will continue to rise nationwide, and as a result, rents may continue to fall. Local experts say they have dropped anywhere from 15 to as much as 40% already in this area, depending on the location. Jim Shutter has been representing retail landlords since 1989 and has never seen the market this bad.
There were so many people that got into development. They were not retail experts. I mean, they had a little extra money. Lending was easy, and they bought an acre and a half of land and put up a small multi-tenant strip building. And you know, a lot of these things probably shouldn't have been built.
Real Capital Analytics estimates that more than $1 billion worth of retail properties in the Chicago area are showing signs of distress or already in trouble. Shutter never used to talk to real estate lenders very much, but is getting more assignments now from those banks taking over distressed properties. In the last few weeks, he and Pador's phones are starting to ring more often from potential tenants. Dollar stores, value-oriented restaurants, and discount women's clothing stores are among those looking for space.
I'm seeing some box guys, not the big anchor tenants, but some of the mid-boxes starting to look around right now. These things didn't exist last year. So now we're starting to see some of this activity again.
That would be encouraging news to local government. Those for-lease signs are not only an eyesore, but also cost towns much-needed tax revenue. And that's all for this edition of Chicago Business Today. For all the latest real estate news, be sure to check out ChicagoRealEstateDaily.com. Thanks for watching. We'll see you tomorrow.